I'm Tina. I am the Chief Number Cruncher and founder of Accounting Pros. I have done tons of videos on the PPP and other programs in the last few weeks, and I wanted to give you guys a quick update. Throughout the process, this whole PPP application process has been super challenging, and a lot of people are currently left high and dry. If you look at the SBA site and many other news articles, the SBA is currently unable to accept new applications because the funds are essentially exhausted. We put through about $8 million in, maybe more, $8 to $10 million, I'd have to look at my spreadsheet, in loan applications for our clients. And about half of them have been funded. The rest are going to be funded probably the next day or so. But during the application process, I found a lot of challenges that I don't really understand how a small business owner would have been able to overcome. I'm an accountant and I lead an accounting team, and part of my job is to read all of the Department of Treasury guidance, SBA guidance, really anything that comes out, because it directly affects my clients. And you guys are benefiting from it if you're watching my videos, because I am incredibly type A, and I spend a lot of time researching to make sure I'm giving good advice. So throughout the process, the application PDF changed like 3 times. The rate changed 3 times. And every lender that we went to did things like completely differently. So as you've seen probably in my prior videos, the way that you get approved is through your payroll costs. Your payroll costs are your gross wages and your state and local taxes and employer-sponsored benefit programs like health insurance and 401k or simple IRA. During the whole process, I was given different methods of applying for different lenders. We had one lender in particular, and we had a pretty streamlined process. But I even noticed in going to our lender that each underwriter would have a different process for approving loans or the documentation that they would require. So even within one bank, one person would say they need the 940, which is an annual return. We're going on a not a calendar year basis, but we're going on a rolling year. So we're taking last April to this March, so 4/1/2019 to March 2020, in order to calculate the payroll costs. Normally, payroll increases over time because our clients are more and more successful. They hire people, they improve wages, they give people more, and so looking at a calendar year really underestimates the amount of costs that it actually takes to run your business. So I had to go through and talk to the lender a lot, enough to where I think I pissed off every single underwriter and actually was told to not call them anymore, or email them anymore. And I have some more information about that I'll be putting in a blog. But it was really frustrating because as a small business owner, every single dollar counts. And when you're told that you qualify for $20,000, $30,000, $40,000, $50,000 less than what you actually qualify for, it's a big deal. Everybody needs to get paid, and the whole point of the program is to pay your people the same wages and to keep the same number of people on staff, to take the burden off of unemployment insurance. But during the whole process, it felt like nobody really knew what was going on. I had to do a lot of training with underwriters from bank to bank. The way that they communicated was pretty awful. Our bank was great at giving us updates, and at times I felt really bad because I annoyed the heck out of them, but at the end of the day they were coming back to us and they're letting us know what was going on, and I didn't have to go back to my clients and say I don't know. So I'm going to give them that. That was awesome. But like our clients that tried to apply at Wells Fargo, because Wells Fargo had gotten in trouble because they started fake bank accounts for people, it penalized their clients or the borrowers, like small business owners, because they weren't allowed to continue lending. They were shut off from lending. So at the end of the day, the borrower is the one who had to go find a brand new bank because there were no more funds available for them. And I am actually a Wells Fargo customer, and I didn't go to Wells Fargo, thankfully, but I will be choosing another bank once everything is said and done. Obviously, it's very hard to do that now, to go switch bank accounts, because you can't go and sign up. You can't open a bank account online with most banks. It's awful. I had people who are applying or attempting to apply with Chase and Bank of America, kind of going in endless loops, or getting a display error on a web page. It's like the website is essentially crashed. And you don't really have time to wait in this sort of situation. Like, you need to get your application in really quickly. And that frustration, it's really hard to handle. So ultimately, I think the rollout of the program was awful. That people who were not working with an accountant or someone who had understood the law or the bill were either getting like less money than they should have, or they weren't applying to the right banks or getting the application in right, didn't really understand like what they deserved. And I feel like they should have made this a lot simpler, maybe waited a few more days to get things right, because ultimately like the borrower is the one who loses. And I am a bit frustrated because you look, so again, this is the SBA page. I'm going to go over to an SBA document, which I will put in the description. And these are for the loan approvals that are through 4/13, so a few days ago. And as of a few days ago, there were 1 million loans. They'd already given out $247 billion through 4,664 lenders. If you're looking at the average loan size, so our average loan is 239,152. So if you take 239,152 divided by 2.5, it's $95,660. So if we take 95,660 times 12, that means that the businesses here are on average at least earning $1 million or more. And if you understand like actual small business, most small businesses don't even make it to $1 million. I think the fact is like 3% of women business owners, something like that, gets to $1 million or more. And if you're looking at the loan size, loan sizes here, we've got, not very many people got more than $5 million. Not, again, a lot got between 2 and 5 million, 1 and 2 million, and 350 and 1. I was reading some stories. So the reason I'm kind of going through this, and I know this is kind of a rant, but I read some articles, and one business that benefited from the PPP is, in my opinion, not a small business. And they're just one of the more reported on businesses, but Ruth's Chris, which is a steakhouse, they received $20 million in funding. They have 5,700 employees, so way above the 500 limit, but they actually changed the program or adapted the SBA rules to any small business that has an NEICS code, so North American Industry Classification Code of 7.2 would be exempt from the normal sizing restrictions. So normally you have to really max out at whatever those numbers are, and it changes industry to industry. But let's just say hospitality, normally about 500 employees, probably a few $1 million in revenue, maybe $20 million in revenue. You'd have to check. But they changed it to a per location basis. So you're probably not going to have 500 employees at one Ruth's Chris, but you will have 5,000 at all of them. This is a publicly traded company with a $250 million market cap, and I feel like it is taking money away from business owners that truly need it. And that's just one example of how the PPP did not work for every single business that it was intended for. And it is incredibly heartbreaking because I have a lot of clients that I'm working with, and my team is working night and day to help our clients navigate this. I've taken calls from people who have found my videos on YouTube. I've emailed back and forth giving resources. And if it's difficult to navigate, and businesses that probably shouldn't be participating are, and a myriad of other things are happening, it just means that it wasn't rolled out right, it wasn't written right, and the wrong people got the money that it wasn't intended for them. So it's really disappointing. Another thing that happened that was incredibly disappointing is the way in which some of the payroll costs were calculated. And there was some back and forth about independent contractors being included and then not included. Fine, don't include independent contractors. But as if you're an S Corp officer, normal compensation or normal payment to you would be a W-2 and distributions. And normally when you're giving advice to a client, you say that you should not have more than 50% of your total compensation coming from distributions. It's just another word for draws, essentially. And your compensation needs to be reasonable and commensurate for your position. That's a little bit gray and more challenging, but we had people who followed those rules that are all kosher in the eyes of the IRS, but lenders weren't allowing that additional compensation to be included. So essentially, if you're an S Corp officer and you take 50% of your compensation on draws, then you're essentially taking a 50% haircut whenever it's time to get funded on this loan. So as a business owner, I always cut my pay before anybody else's. Thankfully, the majority of my pay is on a W-2. As an S Corp officer, that really helped me. But many people, it didn't help. And now they're in a situation where they have to operate their own personal life, by trimming literally everything. The same thing there were some challenges around sole props, independent contractors, and LLCs, but single member LLCs, which essentially operate like a sole prop, but have the legal protection of a corporation, a limited liability company. So essentially all of our clients that were applying on time were then told to apply later. So the LLCs were applying on the 3rd, were told to apply later on the 10th. And that's a big gap. I know that's what it was in the law, but it was in the law for sole props and for independent contractors, not for LLCs, single member LLCs. So that was very challenging. And the lender that we decided to work with actually dropped all of our single member LLCs or independent contractors or whatever pretty much at the last minute. And I think it was because of the challenges around verifying income, etc. But they were in line. They were applied for on time, and then they were told to find another lender, which, if you are searching for a lender at the 11th hour, you're probably going to be SOL. And so we tried to place a few of those clients, and unfortunately we weren't able to do it. And these people have spent their time and their resources building their businesses, and they're essentially being shut down by banks who are unwilling to serve them, even though the bill clearly says that they are allowed to participate in this program. And it wasn't just my lender. I'm calling them out because I worked a lot with them. I have really nice things to say. I think my team worked really well with our lender. Like I said before, I felt like they communicated really well. But this was like industry-wide. Every lender was having the same problems and doing the same sort of pushback. In addition to this, we did this work essentially for free. In the Department of Treasury's guidance, it says that we cannot charge our clients to prepare their application. It is actually illegal. And the way that the lenders get paid is they get up to 5% of the total loan amount, and the agent is supposed to get, from 0.25 to 1%. And most of our loans really fell in the 1% category, and every lender that we talked to acted like they had no idea that the agent fee existed, and our lender actually told us point blank that they would not be paying us for it. And my intention with this is not to make money, but my team worked until 1, 2 o'clock in the morning some days. I worked until 4 o'clock in the morning, 4 days in a row to get these applications out because I want my clients to be able to survive, because I want to survive, because I care about my community. And ultimately, I would have done it for free, and I did it for free. But I think it's unfair that lenders are incentivized, to write these loans, and they're not willing to do the things that are in all the documentation, like paying their agents. So I will be talking with senators and stuff like that, but ultimately, am I going to get paid? Probably not. It doesn't really matter. I'm still going to pay my team what I told them I was going to pay them. I told them I would be giving them the commission so that they can, have some sort of nest egg or something to fall back on in case times get hard or harder. So I'm going to keep my word, but I'm pretty upset that lenders are not willing to keep to the, guidance. Another thing that I will be bringing up in my enormous rant is around forgiveness. And I'm putting together a very, very in-depth article about what you need to do to get forgiven. But if you remember what I said before, every lender had a different approval process. And these loans were super easy. They're 100% guaranteed by the SBA. So if, the lender gets paid no matter what, they also were guaranteed 5% on the back end. So they're guaranteed to get paid no matter what. Yet we had very challenging times trying to get numbers, to agree on numbers, when the way that everything was written was super clear. There's not a doubt that you need to include state and local tax. There's not a doubt that you need to include health insurance paid for by the employer or retirement benefits. There's not a doubt that you can use a rolling calendar year versus a calendar year. That is not in question. That information is very clear, and there's no ifs, ands, or buts about it. I understand that, changing like paying contractors, whatever, all the other stuff though is still written in the law. And we had to fight for those numbers. And in fact, some clients, in their eagerness to, have capital, they took the lower amount when they could have gotten a higher amount, which is unfortunate, but it happens. So ultimately, like I'm a little concerned about how the forgiveness portion will work. So I'll be putting together an enormous guide on how to document your forgiveness. But the very first thing that we need to think about is if the lenders had a very different way of approving the loans, they're going to have 100 different ways to get the forgiveness as well. And now that the lenders paid, what incentive do they have to forgive? And I will, of course, push as hard as I can, and I will do everything humanly possible to get every dime that our clients are legally able to write off from their loans. I want it taken off because my clients, and hopefully you, if you're not my client, will follow my instructions to a T. So if you have a Paycheck Protection Program loan, your payroll loan can only be used for a few different things, and I've covered this in previous talks. So payroll costs, what you were approved on, which may be different client to client, is what you will be able to get forgiven on. So if for some reason you are lucky enough to get members draws included, there's a handful of people, not going to call them out, for obvious reasons, but if you were able to include that, then you sure as hell need to get that forgiven because they gave you money to do that. But the things that everybody else, if everybody followed the rules to the T, payroll costs include gross wages, state and local taxes, retirement, health insurance, all that stuff. If you are renting right now and you've had a rent agreement in place, you can write off your rent. You can't prepay your rent, but it needs to be something that you paid again and again. Mortgage interest, as long as you had the mortgage in place previously, you can include that as well. Utilities, so gas, water, electric, I don't know what else there is, telephone, internet, transportation. I still don't know what transportation is, but you can include all of those things. So if you're our client, we will be collecting documentation from you via Receipt Bank. That's a tool that we use for you to send info to us. So make sure that you get us the statements as soon as they're ready, because we are going to want to make sure that we include that in our files or whatever we provide to the bank. So are they going to ask for it? I have no idea if they're going to ask for it. Everybody asks for different things during the approval process, so who knows what they're going to ask for later. It does say, in the guidance that we should provide statements, cancel checks, whatever. So we're going to need to get any of the statements for things that you're paying on a monthly basis. If you have the ability to get a statement for rent, awesome, send that. If not, we're going to use your lease agreement as proof, so you need to make sure that we get your lease agreement. If you have mortgages, we'll need to get a copy of the mortgage note as well. And if you're also paying for interest for other debt obligations, it's really open-ended. If you have like a note or any documentation, we need to get that because we're going to include the interest on that. And the way that it works is, you really need to be spending the money almost immediately. So the origination date is the date that you sign and you get funded. Most of my clients that were signed were funded the same day. So today, if you got money, today plus 56 days forward or 8 weeks forward is that window that you can spend the money. And they gave you 12 weeks of money, but they gave you 8 weeks to spend it. And the reason that they do that is because of those additional costs like, rent and gas and all that stuff. They want you to continue to pay those bills as well. So my earlier recommendation for spending that money was put it in a separate bank account and then spend only out of that account. And my earlier recommendation for this was to set up a new bank account and, push all the money to that account and then tie your payments out, like remap your payroll to that account, get your gas, your electric all paid out of that account. And that works for a lot of people. But as I found out, it's very challenging to open a second bank account right now. So if you don't have, if you don't have the ability to get a brand new bank account, I have another method that we can follow. So number one is if you have the ability to get a bank account, put the money in the bank account, spend out of the bank account for approved costs only. Don't commingle funds. Make sure that it's very clear that you use the funds exactly as they were intended. If you don't have that ability, I had a savings account that was free. I had money in it, but I zeroed out that account. I moved everything that was currently there into my regular operating account. And then I moved my loan money from my operating account to my savings account. So it's just, it's the only thing that's there. When I run payroll, I look at my payroll reports and I look at my savings account and I go, okay, well, my payroll is $50,000. As I'm processing it, I move the money from my savings account to my operating account. In the transfer, I make a note on there that says 215 PPP payroll or whatever else. And that way I know it's a one-to-one match between payroll and payments for payroll and then payments going out. So I don't want to mislead you and think that every single bank will let you get a second bank account, but you do have the ability to kind of make it happen without having to drive to a bank, which isn't open anyway. The other things that we would need to talk about are utility payments, telephone, like all the stuff that gets like auto drafted. If you have the ability to map that account, great. If not, when that gets auto drafted, move the money over again in the exact dollar amount. Don't round it, don't do anything like that. If it's a $57.15 bill, move it. So that way we can clearly see the relationship between the two. And then, when you're paying for a mortgage or other debt obligations, you're only allowed to take the interest expense. So when you're processing it, when the payment's going out, you don't want to take the entirety of it because you can't write the principal off. It's only the interest. So look at your statement, and normally on your statement, it'll show how much went to the principal and how much went to the interest. And you'll want to, again, have a one-to-one match between the principal and interest. The interest moving out to the other account. It's been a long day. So as you're documenting this, just think about how would you want this to look to somebody who essentially holds your financial fate in their hands? Ultimately, the lenders are supposed to decide, who gets forgiven and not. Hopefully we have some oversight by the SBA in order to facilitate this and make sure that the borrowers get, the best deal. But just pretend like worst case scenario, you're working with someone who has never read the law, who doesn't know what's going on, and frankly is just following rules that they have been handed down to them and they haven't really thought them through. So I'm not saying that everybody's like this, but you have incredibly overworked people right now with laws that are changing every single moment. Like it feels like it's just coming at me so fast that it's hard to follow, just know what's going on. Now think about somebody who isn't reading the documentation and is working a million hours. Like all they want to do is get things approved and moved along. When somebody like me is like, excuse me, the number's wrong, of course they're going to push back and be, pissed off at me because they just want to get the job done. It doesn't matter if it's right, they just want to get it done. So our goal is to package everything up with a nice pretty bow and say, this is what's allowed, you're giving this to me, or else I'm going to whatever the recourse is, if we need to appeal or whatever. But quite honestly, I can smell like class action lawsuits if this does not go right. So you need to work with your accountant, whether it's somebody on my team or your own team, or you need to be very diligent about documenting everything, because at the end of the day, the person who gets stuck with it is not the lender, it's you. You could walk away from these loans because the SBA does guarantee them, but then you shoot yourself in the foot if you need lending later. And the idea in this is to give you the best, put you in the best situation possible. And if you're saddled with debt that you don't need, then you're not really helping yourself. You're just kicking the can down the road. So in my next video, I'll go through our process. I'll be using anonymous data, but I'm going to show you how we're going to be documenting this. We have a Google spreadsheet, again, because we're nerds, but we'll go through everything that you can include, how you can adjust full-time equivalent headcounts. That's a little bit of a confusing topic for people. And then also how we'll be managing salary reductions. There's still a lot of clarity that needs to happen around forgiveness, but at least if we have a good idea of what happened in the past, then we can adjust as things go along. So I will provide my guidance, but that might change, and I'll just continue to update videos and send you guys as much information as possible. But I really encourage you to continue to look at the Department of Treasury's website to see what guidance they provide. And if you were not one of the lucky ones, I think there are 700,000 applications that were not fulfilled that are still waiting for an approval. If you just be patient, there should be additional funding, on the way. I'm not surprised that 1 million loans went through. With the EIDL program, the number that I heard was, and EIDL is Economic Injury Disaster Loan, there was, for the grant part of that program, enough money for 1 million businesses, but 3 million businesses applied. So if you haven't heard back on EIDL, they're also suffering. They're really trying to get their stuff together, but that one might be tapped out as well. So we're all kind of in a holding pattern until more funds are released or something else happens. So I'm very truly sorry if you were not one of the clients or one of the businesses that were able to benefit from this program. I think we still have a long road ahead of us, and we're working our butts off to help our clients, and hopefully you have an advocate for you as well. But I think that we still have more funds coming, so be patient. I hope that I'm not making a liar out of myself, but from what I'm seeing, there's a lot of talks around that. And for the clients or the people who are still looking for funding, we have a really enormous access to capital document that we've been continuing to update, and I talked about it in a previous video. I am doing my very best to note when things are exhausted or if changes are happening, but I am only a human and I'm not yet a robot or a superhuman, but I'm trying my hardest to keep this updated. My team is also helping. If you're looking for bank assistance, we have a tab around what different banks are waiving fees and things like that. Also, we are continuing to find different grant and loan programs that are available. There's about 150 different programs that are listed here, so hopefully you'll find something that works for you and that still exists. If we're finding new programs that are already exhausted, we're not adding them, but there may be some things on here that are exhausted. I do want to make one note. The word grant just made me remember, if you have a PPP, you cannot get an EIDL loan for the same purposes. So if you do happen to get bumped up in the queue and funds do become available and you already have a PPP, just make sure that you're using that money for other things because you cannot double dip. So keep that in mind. And I do know that the EIDL grant was essentially supposed to be $10,000 deposited in your bank account within 3 days, but I know that's crazy to think that that's even possible. Of course, very doubtful from the beginning, but I am hearing that people are still hearing from the SBA. It's just taking forever. But now they're doing $1,000 per employee, which if you have a low employee count but a high, cost of payroll, that's really a challenge. And $10,000 again is not anything that you would scoff at, but if you have a $100,000 payroll, that's going to be hard. Anyway, moving on, we also have alternative lending. Doing my very best to make sure we keep these updated. I did have that Cabbage is here offering lending. I actually need to remove this. They are only offering PPP money at this time, so I'll do that after this. And we did previously have American Express with merchant financing and working capital loans. They discontinued those, so I made notes there. We also have state sales tax deferrals, income tax deferrals, and again, state unemployment. And you may be one of those people who would benefit from unemployment due to the CARES Act legislation. So normally, if you're not a W-2 employee, like you're an independent contractor or 1099, you don't qualify for these programs because you haven't paid into, unemployment insurance. So they're actually expanded it to include independent contractors, 1099 people. However, many states have not caught up to that. I was on a call with somebody earlier that's in Florida, and they were saying that they aren't paying, for independent contractors yet. Same thing with Colorado. I have a client who was attempting to file in the state of Colorado, but they don't have the systems up and running well enough yet. He's been declined. So if you've been declined, please be patient. Please try again. If you need anything, like if you're looking for a program, or even if you have a program that isn't listed here, please let me know. I'm not asking for anything with these videos. I think it's great that people are benefiting from it, but I'm a small business owner. I understand how incredibly important having access to capital is, and if I can offer help to one business that is able to keep their business around longer, I've done my job. I don't need you to pay me. I mean, I'm a little salty about the lender not paying us, but whatever, I would have done it for free or close to free. And I don't really have any other superpowers except for being a nerd and, that spends a lot of time researching, and a really excellent team that will back me up and spend time on this stuff as well. So I hope that it's helped you guys. Please let me know if there's anything else that you're looking for, and I will continue to look up programs. And please watch for my next video that's around how we plan on documenting loan forgiveness, which I think is the most crucial part of this entire program. So thank you guys. Bye.